Breedon Group, a leading construction materials group in the UK and Ireland, has just announced its half-year results for 2018. It's been one of the busiest periods in the company's history. I'm joined here at the London Stock Exchange by Pat Ward, the group's chief executive, to talk about these results in some more detail. Pat, good morning to you.
Good morning.
We'll get on to the strategic developments in a little bit, but first of all, can you tell us what you'd say the key points of these results are?
Well, I think it's quite widely publicised how difficult, how challenging trading conditions have been for the first half of the year. So from my perspective, I'm very happy with the results that we put out at the half year. Breedon has a history of delivering, and if you align that with Lagan Group, who we acquired recently, have a history of delivering, and the combination of that is both parties have delivered. Our EBIT of 42 million was 17% up on the prior year. Our margin was maintained, our EBIT margin was maintained in spite of the weather impact in particularly the first 3 months of the year. And at the time of the transaction with Lagan, we had indicated that our leverage would be about 2.6 times EBITDA, and we've delivered a result of 2.3 at the half year. So very pleasing all around.
You touch on the challenging trading environment, but to what extent have you adapted your approach to trading in order to manage through these markets?
Well, you know, the circumstances are very challenging this year. Brexit uncertainty impacts it. And from our perspective, we have good assets, we have good people. Our customer service is second to none. Our relationships with some of our clients are based on performance. So we don't get distracted by market conditions. We participate in the parts of the market where we think we can bring value. And Breedon's has a history of self-help, so we focus a lot on operational improvements in the business, and we're committed to organic investment, capital investment in the business to continue to grow either capacity in the market or to improve the quality of the assets that we have in the marketplace.
I talked about the busy first half you've had. Up to the 1st of July, I think you completed 4 transactions. What's been the net effect, if you like, overall to the group from these deals?
Yeah, very different transactions. We completed our largest transaction in the Lagan Group in April. But prior to that, we had completed two small acquisitions in the half year as well. There was a small mini-mix business and then an individual quarry and ready-mix plant in the Borders. But aligned with that was a swap deal we had planned in place some time before with Tarmac, and that was executed also. And what all of those together did was it gave us diversity from a geographical perspective. We're now in the island of Ireland, we have a strong market presence, but it also gave us some rebalancing of our aggregates and ready-mix portfolio in the GB business.
And Lagan was the biggest acquisition that the company's made to date. How has the integration of that business gone?
Well, the integration's ongoing. We've only been there since April, but what's interesting is that transaction was completed within 2 years of the integration of Hope, which was previously our largest transaction. I was delighted with the Hope transaction. I'm equally as delighted with the integration within Lagan. But that's only possible for a couple of reasons. One, our colleagues in Breedon have to stay focused on the existing business and continue to deliver those results. But for us, the Lagan business and the Lagan colleagues, and especially I have a debt of gratitude to the senior management within the Lagan Group, because they've kept their employees focused on their business and they're delivering results. And the culmination of both of those is we're on target for the half year. You know, we anticipate being on target for the full year, and I have every confidence going forward in future years where this business will head.
So looking forward now to the remainder of the year, how do you feel about the outlook for the group overall?
The outlook for the group is in face of the conditions, I'm positive about the outlook for the group. We've reaffirmed our commitment to delivering the financial targets that we set at the start of the year. And I have every confidence we'll deliver that. And that will be in a variety of ways. There'll be some commercial improvements in how we price into the markets, and a bit more surgical pricing in the marketplace. We've invested a fair amount of money in the first part of the year, which will come to fruition on the delivery of a concrete plant in the centre of Glasgow, a replacement concrete plant. We've already commissioned the replacement asphalt plant up in the west coast of Scotland, and we're on the verge of commissioning another asphalt plant in the Peak District. So we're committed to investing, whether it's bolt-on acquisitions, which we continue to look at. We still have a fairly active pipeline in that, in spite of all the work and activities elsewhere. But we're also committed to investing in our business for the long term.
Well, Pat, tremendous amount achieved in the first half of the year. Thank you very much for your time today.
Thank you.